Morning, everyone, and thanks very much for joining me. This is the morning market review. My name is Russell Shrum, the senior market specialist at FXCM, and my email address rshaw@fxcm.com. Today is Monday, and it's the 29th of August. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few minutes. And just going to bring up our market commentaries disclaimer. I'll keep this on screen as well for just a few seconds. Good morning, Anna. Nice to have you on the webinar. Thank you, everyone, for joining. It's a pleasure to have you on the webinar bright and early on a Monday. Here's our references: Market Scope, CNBC Trading View. We'll bring up the Trading View. It's a bank holiday in the UK. So I was looking at the commentary on CNBC, and the article out of the UK is not there, so I'm just linking that with the bank holiday. But there was an article from the Asian session, so we'll just go through that, and it reads as follows. Japan's Nikkei led losses as Asia markets dropped after Powell's Jackson Hole speech. Shares in the Asia Pacific traded lower on Monday following Fed Chairman Jerome Powell's speech at Jackson Hole on Friday. He warned that rising interest rates will cause some pain to the US economy, saying higher interest rates likely will persist for some time. The Nikkei slipped 2.58%. The Kospi was down 2.1%. The All Ordinaries was down 1.97%. And the Shanghai Composite dropped 0.11%. All right, so we'll just leave it at that. For the calendar is very sparse today, not much on it. And of course, I think that the communication out of Jackson Hole was pretty much what we anticipated. My opinion was he had to use that platform to actually lay down the law, so to speak, the proverbial law, and I think that he did that, and that I think is going to largely be an influence for the coming days. That's the way we're going to be looking at the market, to see the fallout from that, so to speak. And what you can see here on our trading view, we've got the real rates, and the real rates are moving back into that bullish territory. And you can take a look at the US dollar, and the US dollar remains in bullish territory. And the correlation coefficient between the real rates and the dollar is strong. This is actually around about 0.75, I think. Yeah, around about 0.75. So it's still strong. And what's interesting, we're looking at the weekly chart. You can see the Bollinger's are starting to squeeze on the real rates. And given the communication out of Jackson Hole, one, I think, could be forgiven for thinking that perhaps there's going to be an expansion in the real rates and we get a movement up. Now, again, don't want to get ahead of ourselves. We want to just see how the real rates move from here. They're going to be highly influential for our positions as traders, and the dollar remaining in its bullish area, highly influential for our positions as traders. And the markets, I would also suggest, behave as anticipated. So I'm not sure if anyone was trading on Friday, but there was money to be made as the speech concluded. It was a very short speech. It was under 10 minutes. It was somewhere between 8 and 9 minutes, and it was very much to the point. the euro. Okay, so I've got a position on in the euro, and I was very clear that's what I was looking for. And okay, so there's some sort of support here that's coming in at the S1, so I may close this out. But there's just been a real heartbeat here, hasn't there? So we'll carry on monitoring in terms of matching the technicals with the fundamentals, and that's what's giving us the edge. A lot of technical traders completely ignore the fundamentals, and it's my belief that's to their detriment. So we want to marry those. Okay, so there is obviously a bullish tilt or theme that's now running through, and we wanted to see how that evolves. Let's take a look at the just because of the bank holiday, we'll do more sort of fundamental stuff tomorrow. So what I want to look at tomorrow is core CPI, I want to look at PPI, I want to look at GDP, I want to look at U3, and I want to look at the correlation to the risk markets, which we did previously. So we're going to now that this is all starting to unfold, okay, so we kind of put the hypothesis down, and now it's starting to unfold. We want to update that type of analysis. So let's go through to our weekly chart here. This is now we're looking at euro, and here's the impulse down, correction, impulse down, correction, impulse down, correction. It looks like we're in the next impulse down, right? And we were talking about breaking parity last week. Well, we kind of now talking about perhaps breaking that spot 99 level, right? So that is kind of the next level to consider, and we're in the midst of this. Okay, go through to the daily chart here. Okay, so we're in zone 3. Here's the expansion. Look at the momentum, weak. Okay, you don't want to long into weak. When I say weak momentum, it's not quite right. It's actually very strong momentum, but it's to the downside, right? So lower quintile, we've got strong momentum to the downside. Upper quintile, we've got strong momentum to the upside. The last thing we want to do is short into strong momentum to the downside. Sorry, I beg your pardon. The last thing we want to do is long into strong momentum to the downside. Similarly, the last thing we want to do is short into strong momentum to the upside. So here we've got momentum to the downside. Okay, so these rallies here, these were suspicious from the word go, and that's what we were keeping an eye on. Right, let's take a look at the possible permutations here. So what we have here is cross trigger 1, cross trigger 2, okay, and now we're got the momentum working in our favor. Okay, there is some support here at the S1 level. Okay, so the question is, does S1 break or not? And of course, I don't have the answer to that. If we get a crossover here, it would be time to close my position. But then I'd look at the central pivot as the next level for a short. Okay, so that's kind of the way I would be looking at it on my personal account, because I want to trade with the momentum. I don't want to go against the momentum. That's the quickest way to blow up an account. So that's if you're gonna fade trends, it's a high risk, high reward type of endeavor. Most people focusing on the reward. You've got to focus on the risk. Okay, so we've got to just be very, very cognizant of the support. Getting in at this level, just understand there has already been a considerable move. There might be some profit taking, and perhaps the central pivot perhaps may offer a better risk-adjusted entry. There's no guarantees. Okay, so anytime somebody's trading, stop loss risk management, that has to be reiterated. But there's something certainly that remains on my watch list. The idea here is, of course, I'm not licensed to give buy or sell advice, so I'm talking from my personal account, looking to exploit the short side. If you want to go long, high risk, high reward, must have that stop loss in, must have that risk management calculation in, this 99 level here could be a psychological sort of support level if somebody was choosing to fade this. Let's go through to the DAX. All right, so DAX is has capitulated as well. We go through here, and we can see that the trends again playing out pretty much textbook. Peak. Let's actually pull this down. Yeah, that's better. Okay, there we go. Peak, trough. Okay, here's the lower peak. Here's the lower trough. There's the downtrend. There's the downtrend. Lower peak. This question mark can be taken out. This is a lower peak now, for sure. Okay, so we've got this LP in. So now the question is, do we get this lower trough here? Okay, so and you can see we've got the question mark because we don't know if that's where we are ultimately heading. But we can say the trend is down. So in order for this lower trough not to be realized, or there has to be sort of a move that is against trend. So either something like that or like that. Okay, so I think that there is certainly scope here for some weakness. Again, can't guarantee it, but it just would be sensible considering that we have this lower peak, lower trough, lower peak, and the fact that we've got some blue here. Well, that makes it now quite enticing because the obvious question is that blue justifiable, or is it suspicious? And if it's justifiable, okay, then you want to perhaps fade it. But if it's suspicious, you want to exploit it, right? So the idea here is we've got, so it runs into zone 3. We are clearly in zone 3. We've got a very strong momentum to the downside. You get these strong momentums to the downside if they hold. Okay, you get swings, right? So again, I don't know if this momentum is going to hold, but if it is going to hold, then we should get a swing, right? So if we come out of the 20, then the downwards momentum is starting to fade out. If we hang around that 20 level, well, then this is suspicious. This movement is suspicious. If it's suspicious, okay, well, this upper tile is looking pretty interesting. It's looking pretty interesting. And what we can do is just kind of line it up with some sort of confluence. Let's see if there is any other confluences here. Yeah, kind of perhaps could be reaching here. Perhaps some sort of influence, some sort of polarity here where the support's turning into resistance. So we just want to keep an eye on that. I'm just going to go and mute because I can feel I'm going to cough. I beg your pardon. Okay. So want to just keep an eye on the key levels above. Now, fundamentally, what we would expect with high interest rates is pressure on the index. Okay, so we've done this previously, but we want to just reiterate. Okay, present value index equals cash flows index, right? Divided by 1 plus interest. Okay, and we'll just keep it as simple as that. We better put brackets in here because otherwise it's going to be confusing. All right, so we'll leave out the exponent. We don't need to put in an exponent here. But what we can say is that interest rates seem to be moving up. 1 plus interest is the denominator. Okay, 1 plus interest is the denominator. Present value is the numerator. So if your denominator, okay, or it's not the numerator, it's a numerator. That's more correct. So if your denominator, okay, is moving up, and your, well, for this example, we're just going to assume constant cash flows, well, then your present value is going to come under pressure. And if it comes under pressure, well, that central pivot R1 level, well, these become very, very interesting, okay, because they become potential targets now. Okay, the sell-off's done. The sell-off started after the Jackson Hole speech. All right, some profit taking, some gap closing. All right, that's kind of, I think, pretty much part of the heartbeat. Okay, the pulse of the market. So what do I mean by that? Well, the impulse is done. 1, 2, 2, 3. 1, 2, 2, 3. 1, 2. Okay, it looks done, right? We've kind of hit the nadir. Okay, so now some sort of 2, 3. And now the question is, are we going to get a continuation of the pulse? So this is kind of what we're looking at here, but the opportunities are there. It's just now about looking at the entry methodologies, keeping an eye on the stop losses, keeping an eye on the risk management, and seeing if we can get the hawkishness that's now starting to, I think, become more mainstream. If we can get some sort of build up in terms of balance, right? Trading account balance. So again, yeah, it looks like the impulse is done. Okay, it looks like this trade's almost, it's just about to be concluded. Okay, and then we'll see if there's another entrance or not. Okay, so that's kind of what we are looking at for the rest of the week. Does the hawkishness pressure the risk markets? Does it support the greenback? And if it does, can we exploit that? Or is that line of thinking off? You know, is there some sort of fading taking place? And that's what we're going to be looking at for this week. Any questions? Any questions? Please go ahead and type those in. Any questions? Please go ahead and type those in. Again, just want to reiterate, a lot of what I've said today, you know, is what I'm looking at with my own account. I often take losses, you know, but they've got to be controlled losses. And if you have a different view, just make sure that it's based on an analysis, a sensical analysis, that's fine. No, that's fine. The key is risk management, stop losses. All right. Nothing coming through. So let's conclude at this point, and we shall meet up again tomorrow. Tomorrow we'll go into more fundamental base analysis. Thanks very much, guys.